Probably, I think what we did is like close to 4 yesterday. Yeah, what we're going to do is go about 45 minutes to 3:45 with the material we have now, and then we'll see if they want to give them their questions. Yeah, we give them their quiz, and then we see that they're not asking any questions. Oh, yes. So when we get to that point, I'll ask you. Thank you, my dear.
Or the guy that sends an email and it's to Joe, to Mac, to Bill. Who responds? Who responds? Usually it's to CC. That's the way I know. 1, 2, several CC. One person responds. Usually the ones that are twos, there are a lot of people, they don't ask for response. I've seen it business too. That's so many twos. And so who's the letter to?
As long as you're not first on the list, you got to pay a lot.
Slow down a little bit, don't.
Oh, okay. Okay, so we'll try to wrap this up. So I will commend you. It's 3 o'clock and you're still alive and breathing, haven't fallen asleep. So that's pretty good. Haven't had to throw any chalk or anything at anybody to wake them up. Okay, before we go on to the other stuff, because a lot of it's going to be like going back to like a little bit of detail excessive and trying to drive it back into your mind there. Is there any other questions that you've come up? Obviously you had conversation, which I said is very, very, very good. I like to hear people talk, and especially at this type of group there, because that's how we start networking, is by that conversation. Don't be shy to give out phone numbers, email addresses, business cards there, because there's nothing wrong with that particular standpoint. Okay? Any questions before we continue? No? Okay.
Okay.
Oh, one question.
Okay, hold on a second.
Does the CGA have a one of those groups for private practice? You know, that you can basically talk online with other practitioners. Is there
Yes,
something like that?
it's a PPDL. Call Sarosh, and he'll be able to get your information and hook you online. Yes?
Hang on.
Hold on.
Sorry. We got to be
By the way,
fair.
we need to put the microphone on a stand there.
Okay, we
But
can do
then
that.
people don't want,
Next time.
people don't want to get up.
There's also a LinkedIn group on LinkedIn for
Oh, yes,
CGA
yes.
Canada.
Yes,
It's
there
got some
is.
public practice.
LinkedIn, but I think he was, the PPDL is large. Yeah, the PPDL, if you're not aware of it, you can call Sarosh, and Tom McCallum moderates it, and I think it's pretty good. And there's a lot of questions that are posted on there. If something is fairly current, and I agree with you, LinkedIn is something that's growing tremendously. I don't know how it works that well. I'm LinkedIn as well, but I'm not getting that benefit yet.
It's a discussion group on.
Yeah, which is great.
Okay, so we ended off about planning before you do an engagement. And always at the end is your time and your fee budget. Okay, so the next slide is, like I said, like when do we cut off between a compilation and review, and when is it appropriate? So you have to consider the statement required by the lender investor. Remember, you're there to satisfy the user. So whatever the user wants, you have to do. What you may have to do is talk down the user because they may want an audit, and you say, no, I think a review may be more than appropriate, or not even a review is necessary. I think a compilation is more than appropriate. But usually when people start lending money, they do have an obligation or a request that you have to meet certain criteria or covenants. And usually one of those covenants is that normally you have to issue a review engagement. Consider the reliance on those particular statements. So again, the more reliance on those statements there, then the higher level of report should be issued towards it. Have you made significant adjustments within the format there? So again, if you did a lot of analytical queries and adjustment there, your file by default may be in a review status even though that wasn't your initial intention. Benefits to the clients from your knowledge gain. So in other words, what can you do with it? As I said before, if there's any intention that the client wants to maybe expand or maybe want to sell it, you may want to educate them that it's more appropriate that those statements are done on a review basis, and the sooner he does it, if he does it this year, then this year's review, next year's review, so now you have 2 years worth of reviews, and if it's intention to sell in 2 or 3 years, you have a little bit of continuity with a little bit higher assurance towards those files. What are the clients really trying to get out of this? That their only sole objective is this to file a corporate tax return, then that's why you probably left it at a compilation basis, like as far as that goes. Clients' awareness of limitation. If they read the report, they said, doesn't really tell you that much in the sense that they're not really giving you any comments. So that's why you got to say, are you happy with this? This is all you really need, and this is your only compliance that you have to do. Increased risk of misstatement, like as far as that goes there. So you can't associate yourself with false or misleading information. So if you keep the engagement too simple, you may actually do omit like major areas because you haven't done enough additional work in that particular file that may or may not brought something up.
I agree.
Get away.
Oh,
We don't want to go back, John. We want to go forward. That one. Oh, is it back there again? Okay. Oh, sorry.
doesn't really,
Hang on.
okay.
Maybe just remember reiterates a few times.
Yeah,
Okay, sorry.
okay.
Okay, individually, and this is going to go on for the next few slides, so we're not going to do this over and over again, but we just got to go through the concept. In a compilation procedure, no matter what the category of it, like as far as that goes there, they're saying, okay, it was a bookkeeping engagement, you record the receipts in this first and you reconcile cash. All of a sudden now you got the GL trial balance available. Is there a reason for you to believe that those financial statements are false or misleading? Because the cash is obviously incorrect, incomplete, or otherwise unsatisfactory. If no, move on. If yes, what do? You got to discuss it with the client. You got to scan the transaction for errors. You got to reconcile. You may have to re-reconcile like a part of that, and adjust as necessary or document the rationalization for not making an adjustment. In other words, you got to satisfy yourself that the cash is not unreasonable and it's not false or misleading. So every time you got to ask, is that amount reasonable? If there's $500,000 in the bank, what would be a reasonable thing to have in your working paper files? What?
You're going to have to walk now.
We need exercise at the late in the afternoon. That's right.
Okay, one of the most reasonable things you would need is a bank statement to support the balance, and I was mentioning earlier a reconciliation to show how that balance came about. Because there's always going to be a difference between a GL balance and what the bank's balance says.
Correct.
Right, because it gives you information that substantiates that particular balance. Now, when you start your words substantiate, you start thinking about audits or reviews. However, it's very reasonable to satisfy yourself that there is money in the bank, and that'll be easily supported by at least a bank statement and a bank reconciliation, and maybe or maybe not a bank confirmation. But we don't want to get into bank confirmation unless we have other justification, because then we are elevating it potentially to a review or to an audit status for that particular account balance.
What is being addressed here is that you're going to have to make that choice and that decision that you're going to do more work in order to be able to come to the conclusion that that balance is reasonable. So if that work happens to be a review procedure, it doesn't automatically make this a review engagement. And that's where people get confused. Can I have notes to the financial statements, or can I put a comment on my worksheet? They think that as long as something happens, it automatically changes the engagement. It doesn't change the engagement, because remember, you're the CGA. You're the one that needs to ensure that you're not associating with false or misleading information. You're the one this is an excellent flow chart in terms of the asking the questions, what do I do? And if that information is reasonable and you do nothing else, well, that's complete. You go on to the next number. You go on to the next section. So it's very important that if there's reason for you to believe that you're going to have to elevate it, not to get concerned that, oh my God, a confirmation is an audit or review process. Or else the engagement stops right then and there, because as far as you're concerned, you can't move forward. It's false and misleading until you move to the next step. Either it's adjusted or you're satisfied.
Like if you have a client that who has not done the bank reconciliation from the beginning, now he bring you a bunch of invoices and some paid checks, stubs.
Yeah.
So you try to reconstruct the book, and finally you end up with some anticipated cash balance that doesn't match with the bank statement, because he has had personal money going into the company account and coming out. Are we supposed to reconcile it from the day one to day end, or what kind of a reasonable differences we can accept?
Well, you're the one that's going to make that decision. You're going to be able to have to look at the work that you've done, the information, that discrepancy, and where you go to the next step. When I come in as a practice inspector, I'll be looking at what that decision that you've made, and I'll be making a decision as to whether it was whether you moved in the right direction. But I could never tell unless I actually see it, unless I actually see the file and I see what these numbers are, and I see the adjustments that you've made. And when you say the clients put in money, there's ways of looking at there's a deposit book. The deposit book would be clearly indicating the funds that have come from the owner. If all the funds that the owner says have come from him are all cash deposits, I don't know if I would believe him. If the client's actually moved money in his account from another savings account, it should be pretty clear on the bank statement. You'll be able to see it. So there's no mystery. There's no mystery. If it's we that make it a mystery. Well, I only did this and I don't know. You know. You already have a certain suspicion. So that's what we said. You've got to be able to do your work, and you're the one that's going to decide.
Thank you.
Okay?
Just remember, like I said, for you to satisfy that the information is not false or misleading, you're allowed to do a review procedure or an audit procedure per area. What you got to watch out for is that the more areas you treat that the same way, as a population of that file, you may be construed that no, you've elevated it, that this should have been a review, or you've elevated that this should have been an audit. But nothing precludes you from doing one or two small areas, or even large areas, as long as it's not widespread throughout the whole file.
And the last slide, it actually said significant adjustments.
Yep.
That's exactly what it's saying. You're looking at a file that you possibly cannot do unless you do it on a review basis because of where the file is at. Then that's what needs to be done. I'm not going to give you an example, but in most cases we're not dealing with these extremes. In most cases we're dealing with, there's types of businesses that are going to have his situation, and so if you do one, you do two, you do three, you have an idea on where these businesses are coming from. And if that's the client base you're going to have to adapt to them if you want to survive. Or else you're going to find that you're being duped and all of a sudden you're accumulating a lot of clients that have a similar business because word gets around. Say, hey, go to Bob down the street. He can't see through the numbers. And, so you got to be careful that you're not Bob down the street that ends up with a lot of similar clients because they're getting away with something. Because it could turn out to be a problem down the road.
And remember, the rationalization, how is it logical or possible that the fact is that the shareholder is constantly doing deposit from cash? Where's he getting the cash from? Where's she getting the cash from? More than likely, it's on some type of unrecorded revenue, like at that point there. Not necessarily, but possible. So you have to satisfy yourself to eliminate that doubt within your mind.
And there's absolutely nothing wrong with being skeptical that it is possible that it could be unrecorded revenue. I would venture to say that you should be skeptical. You don't have to. You're not making an assumption that your client's a crook. All you're doing is you're saying, well, it could be this or it could be that, and then you investigate, and wherever it goes, right?
Or how about we go this way? We get a painter. He's got like 60 or 70 invoices. They add up to $155,000. We go through and add up all the deposits that went through the bank with $170,000. Guy doesn't have two nickels to rub together. What would you do?
Give him a nickel.
Two. Got to be able to rub it together. I got $170,000 deposit. I got $150,000 in invoices. What would you do? Can't ask questions after 3.
We're losing them.
I'd be inclined to assume that the deposits were the revenue. But you'd have to talk to them probably to make sure that
Well,
that
on the
makes
assumption
sense.
you talk to them, or you know the client there, then yeah, you would adjust revenues to increase the in the amount there.
Exactly. And you know what? That was a good answer because you're not definitive. You're saying you're going to the probability that it may be unearned revenue is there, and you're aware of that. But you're going to investigate by talking to the client, by looking at the records, and take it from there, right?
You just may have misplaced some invoices or something, and he'll say,
It's possible too.
20 grand? Oh,
Well, no, but
is that big job I did in February in there? And I said, no.
No, and especially when the fact is that the invoices are not pre-numbered.
Right.
So there is a greater possibility that invoices got purposely missed. or just casually miss. And what you got to decide for yourself is, was it done on purpose, or was it just accidental because the guy happened to be a little bit sloppy and whatever. So hopefully, unless you got any other indication, you just assume that the person is sloppy unless you refer. Once you start believing the person is doing it on purpose, then we go back to the integrity of the person. Then we go back to whether or not we should, continue or maintain the engagement.
Yeah, you might be able to look at the details of the 150,000, and if you have the bank statements for the year, try and do some sort of matching process to just figure out, okay, all I'm missing
But
is
again,
the 20.
we don't want to do too much because again, it's only a compilation.
I know. I hear.
Agree? Okay. So we look at the next one. If we take into consideration of accounts receivable, if we did a bookkeeping engagement, then basically all we're doing is recording accounts receivable from information provided, which is primarily sales invoices or whatever, or amounts deposited. If we have an actual trial balance available, considering the nature of the business, whether sales are cash or credit, and if we do have receivables, are there bad debts to be considered? We're back to the same type of question. Then once we get to that point, is there reason to believe that the financial statements are false or misleading? Because the accounts receivable is obviously incorrect, incomplete, or otherwise unsatisfactory. If no, vacate. If yes, you got to go to the next step. You may want to discuss it. You may want to go to the factor review, like we did in our little analysis of the accounts receivable. If there was larger amounts in the over 90 days, should we discuss it? We're not supposed to talk about materiality, but if it's not going to be false or misleading to adjust or not to adjust it, we may say, hey, it's only small dollars. It's not going to make a big difference there. So hopefully that they're not there, but there's no harm to actually discuss it. Attain accounts receivable list and reconcile. Hopefully you already may have had that before. Consider cash basis disclosure, which is usually not the case, especially if you're incorporated. Adjust if it's self-employed, you may have to take that in consideration. Adjust as necessary, document rationale for not making an adjustment. So you just can't look at it and, oh, I'm not happy with this, and just move on there. You still have to come up with a judgment, and you have to rationalize why you did not do something, especially when you had the first inference that you thought it was false or misleading. Okay?
Just one final comment on there. The last part is really difficult. To document a rationale for not making an adjustment doesn't alleviate the fact that the accounts receivable is obviously incorrect, incomplete, or unsatisfactory, just because you're documenting it. So I have a bit of a problem with the last part.
It'd be subject up to, you'd be contested on it.
Yeah.
And you'd be contested on your professional judgment.
Yeah, because then it's all in your file, and somebody else's decision will be after the fact. And hindsight is 20/20. So when they're looking at it after the fact, it'll have unfolded, and other factors may have come to play. Which now, if there was a problem with these statements, it'll come right back to that and say, well, look, you knew about it and you did nothing with it.
So let's
you documented you did nothing with it.
So let's consider you had a year-end statement. It was December. You did the file by the end of March. You were worried about the collecting of the receivables. You talked to the clients, and now they're all collectible. Maybe the client truly believed that they were all collectible. Then you come back to the 9 months later, and you find that $4,000 or $5,000 of that was uncollectible. But then you found out that the client actually received notice from the bailiff that his clients were actually under thing, and there was no hope of actually getting any collection. So he took whoever he worked on in good faith that they were going to pay them. They probably directly or indirectly lied to him, and he had external confirmation after the fact because he took good faith that it was bad debt. But if he didn't find that information out to, for argument's sake, May or June, then the guy hasn't really messed him allegiance. But if he did have that information in January or February, and he either choose not to tell you or forget to tell you, then you start questioning his or her integrity to show you like a subtle difference. Okay, so we're not going to do the rest of them because they all follow the same logic scenario. But if you want to read it yourself, the main thing is if it's no, move on. If it's yes, you may have to do additional steps or whatever the case may be.
But basically what we went through in detail This is actually telling you to look at it and the rationale, and I think it's pretty good for you to have it. I guess the other thing we can talk about is making sure that you do have all of the appropriate letters, the representation letter, the audit waiver, the engagement letter, any letters that are appropriate. What we can do now is probably spend the rest of the time, we could talk about caseware. Sure. And caseware and APF. These are working paper generator file. There's a section in your booklet about that. And let's start off by asking the participants, who's familiar with caseware right now? Who uses caseware? 1, 2, 3, 4, 5, 6, 7. I probably would say about a third of the room. So 2/3 of the room is, are you using another working paper generator file like AFP? No? Any other working paper like Fast CPA, or there's other ones out there? No? Okay. So let's just talk a little bit about caseware. Has been around probably for, I guess, 20 to 25 years. It's been around a long time. And it has evolved to the program it is today, and it is a really good program. The problem with any of these programs is that there's a significant learning curve for you to get it up to a certain level in order for the program to work for you, as opposed for the program to work against you. And so it's very, very important that the way the information is put into the file is done in the best manner for caseware to work as efficiently as possible. What I can tell you is that caseware works on two bases: mapping or lead sheet. Your financial statements can be generated directly through CaseView, or it can be generated through other packages that work with caseware. We happen to have purchased a program called Jazzit, and Jazzit works with caseware. There's Brendan Summerhill, I forgot what the name of his company is. He has templates that work with caseware. They are very useful in terms of creating templates for you that will make your job a lot easier. But you still have to learn how to use these templates. So to get back to the way the program works, it works on a lead sheet, or it works by mapping. That's it. I had a brain cramp there. I'm getting tired. The mapping is the more sophisticated way. It allows a much more detailed approach to the financial statements. It's a lot easier to move your numbers around on your financial statements, and a lot easier to generate a lot of other reports with mapping. Lead sheet is probably a quicker way of getting your financial statements out, but it does not offer that much flexibility. So I found when I do practice inspections, CGAs that are using it through a lead sheet approach are very careful not to change anything, because if they change something, they don't know if it's going to work. So they want to make sure that everything flows through in the same way so that the statements don't change, and it's kind of difficult to work with a program like that. So it is better for you to choose the mapping route and to learn how to map and to make it work. As an example, some of the things that you can get from the program, you can get the program to actually do an HST analysis to see, based on the records, where your HST is, and based on the HST reports, how close the records are with the actual reports, which is really good to know. how far off it is. You might want to investigate. If it's not, if it is far off, you might want to let the client do it. Like clients do all sorts of things. Some don't want to pay their HST unless they've been paid, which is incorrect. But once they start doing that, you lose all control on what should be paid. Because they don't pay because they haven't been paid, and then when the money comes in, they don't want to pay because, oh, they forgot. So you've got to be able to work with the client and help them understand what the requirements are. The checklist, as an example, through the checklist that you would buy would be separate from, and you would buy them from Caseware. If you're a member of the Institute, you provide them with your registration for PEM, the Public Engagement Manual, and they'll allow you to buy the audits and reviews. So for CGA, I'm not sure how Caseware uses it. We deal with Jazzit, and we buy our checklist there, and they do the same thing. They want to know if you're registered through PEM, what your registration is, and they'll give you the Institute ones. If you're registered with CGA, they'll give you the CGA checklist. But it's a separate package that you buy from them.
Question for you.
Yes. Online?
Before you actually
Okay.
continue on, because it's relevant to what you're referring to now.
Okay.
It's twofold. So I think you kind of answered this. The first one was, do you have to be a licensed accountant in order to purchase Caseware?
No.
No. Okay. And do you know whether you have to update it every year? So would you have to buy a brand new version of Caseware every year?
We do. We're very current with all the software that we use. We've purchased it. We might not have implemented it immediately. It may take us a little bit more time to implement it, but we stay current with all software because that's the only way to go.
Okay.
You can get away with using older softwares, but you cannot get away with using older checklists.
Mm-hmm.
So if you're doing compilations, you don't necessarily have to use the checklist from Caseware. You can get it from your public practice manual and integrate that with your checklist. You can create your own checklist in Caseware. And so as long as they're maintained updated, yeah, you're fine. And you can continue to use the same Caseware as long as it works. So the answer is it's better to stay current, but not necessarily. You don't have to stay current, but you must stay current with your association's requirement with checklist.
In terms of the cost for Caseware, could you maybe provide us with an estimate of how much it could
I can't
cost?
provide you an estimate in terms of the dollars, but it is affordable, and it is based on the number of users. So if you have in our office, as an example, let's say there's 5 users between partners and staff, then it would be 5 times, but you can buy it for one user. You can buy it for one user. Yes? Microphone.
I can give you the price for the Caseware.
Oh, good.
From one user to a user, the price is 1,050, something like that.
1,050 for one user?
For 1 to 8 users.
Oh, 1 to 8
so
users.
it's a packet minimum 8 users if you
Okay.
buy. So if you add another user, and then it's $250 per user.
Okay, so see, for us,
If you're 9,
we didn't pay that when we got on, but obviously we got on. When we got on, we paid for 3 users.
so it's made minimum.
It's changed. Yeah. Okay, good.
Oh, thank you.
So I hope that helps the personnel line. Yeah. And sorry, there's the once you're registered, that is for a first-time purchaser. The fee for the $1,000 fee. But beyond that, there is a smaller component which you'll pay to stay current. 50%. Okay, I got it. 50%. Any other questions online there, Ellie? Good. Okay. So, yes, you have a question. Good.
Question about caseware.
Yeah.
Let's say the user can be same company or can be different companies, like different.
You can do it, caseware, you can use it for all of your clients.
No, like we are starting as public practice. We are three
Oh,
people.
that you would have to discuss that with them. I couldn't tell you how you would be able to use it because it's software. It's it's licensed software, and so whatever arrangement you make, you have to make it directly with them. Any other questions? Okay, so basically the beauty of a program like that is that once you go through the process and you complete your file, you've got your draft statements that are referenced to the working paper file, you meet with your client, and you determine at that point that the client wants to increase his management bonus. He's changed his mind, he wants to increase it. Not a problem. You go back, make the change, your statements are now reprinted, meet with the client. It's very, very efficient. The other thing is, errors that are normally made on financial statements through using Word or using Excel is forgetting to change the dates, forgetting they don't add. Here it actually will give you a diagnostic. Hey, your financial statements are out of balance. So you've got to go back and investigate and find out what it is and decide what has to be done. So it does. The other thing is you in the program itself, you put in the information of who the client is. When you print out your letters, all of that information is on the letter. Who the contact person is, who the client is, the address. When you consider doing all of those things using word processors, and the amount of time that you save is quite significant. Okay, so I think I'm pretty good with that. AFP, it's an Excel-based financial generator program. And Cleve Pendoc, and the company is Pendoc Mellar. I think if you Google AFP working papers, you'll probably get his website. My understanding is that it works as well, and he's trying to keep it. What he uses is he uses Excel. So you must have a current Excel, and then learn how that program works. But it's definitely a choice to consider. If caseware is $1,000 just to start, maybe that program might be a lot cheaper and might meet your needs. So it's something for you to consider. Does anybody else have any questions? I think they know everything about caseware now.
I do believe that's it.
Okay, I think what we've done is we've come to a point where we don't have any more presentation material for you, but if you have questions, we're definitely willing and able to assist you and answer all those questions. And Ellie has
Comments?
Just
Just don't forget to look at the back. The back has, like Appendix A. They do give you samples of the public practice manual forms. So in other words, if you haven't seen anything there, it'll give you like different examples of it. We went through one of it just doing a compilation, but it does give you a few more examples of them. So like if that stays there, so don't forget to look at the back.
okay.
You're up.
Okay, well, first off, I just wanted to thank everyone for attending the seminar. I see a lot of familiar faces, and you're all shocked that I remember your name. So once I know your name, I know exactly what you look like.
Uh-oh.
Okay?
She's really good.
Yeah. Once in a while you throw me off, but I will know you next time. So again, thank you very much for participating. I hope it was informative for you, and thank you to the speakers as well. It was a very busy 2-day informative seminars that we had. I just wanted to remind you that the skill test questions are due 24 hours after the end of the seminar, so by end of day tomorrow, please. If you could fax those into my attention or scan them and email them to me. We actually have the hard copies for you here. We're going to distribute them to you at the end of the seminar. And just a note, if you're participating in this seminar or the one yesterday and aren't planning on pursuing public practice, you can take the test, and in doing so, you will get an additional hour of CPD. If you aren't pursuing public practice, then you don't have to submit the test at all. But if you're looking for an additional hour of CPD, please go ahead. You can submit that to me and just identify that you're doing it for the extra hour. But otherwise, for those of you who are, which is the majority of you, then you're going to get the marks, and then you can move forward. If, for example, you don't get 12 out of the 16 questions, there is an alternate version of the test that I will be sending to you, and then hopefully by that time you'll get 12. But I know all of you are going to pass and get 100%. So we don't have to worry about that. In terms of getting your marks back, we are aiming for late next week. Okay, just remember, because it's a long weekend by the time we mark and pass them on to you. If you don't get it at that time, expect it early the following week. I'm going to be sending you all an email about receiving your test. I know a lot of you handed it in to me in person, but I'm still going to confirm just to make sure. And that's it. So if you have any other questions, don't hesitate. Email me, contact me by phone, and I would be happy to assist you.
And what about their case file?
The case studies?
Yeah.
So case studies, everybody's going to receive an email. Thanks for that reminder, actually. You're all going to receive an email from me that will include details and attachment of the 2 case studies. Just a reminder, you need to complete those 2 case studies if you're wanting to pursue public practice. There isn't a specific time frame for you to complete it, but again, if you delay it, I mean, the longer you delay, the longer you're delaying your being able to pursue the pathway. You're only required to complete 1 of the 2 case studies, but again, if you want to get additional CPD hours, you can complete the second one as well. But the email will provide you with all the details that you need.
I think they said if you do 1, it's 5. If you do both, it's 8.
Exactly.
Right?
Exactly.
My suggestion would be that you should all complete these questions. Should you decide that you want to go into public practice down the road, you've met this requirement. If not, you've got to go through the process again.
Exactly.
Yeah.
Unless you want to come back and see us another day or 2. I mean, that's fine.
Exactly.
We don't mind.
There we go. Thank you. There's 3 there. There's 2, 3, 4. Thank you. There's 1. You know what? I'll pass it on the other side.
Are there any more comments online?
There you go. Thank you.
Yeah.
There you go.
You may want to keep it open for 10 or 15 minutes without.
There you go. There's 1 each. 1, 2, 3.
Oh, okay.
2, 3, 4. 1, 2, 3. Okay. No problem. These are all blank.
Oh, these are 10 cards. These are for if people show up and I don't have them printed. So the question is, will we need caseware for the case study? And is there a student version that will be provided? If so, I don't think so.
I don't think so.
I don't think so, to be honest with you.
Am I off the mic now? Still on. You know what? Bruce reviewed it. He would know.
somewhere.